Good evening and good weekend to all. A new week begins. It's Sunday, the 8th of February 2015. Okay, so a new week begins. Future should be open shortly with regards to Forex, and then obviously indices very shortly out thereafter. Okay, so what we how are we interpreting the events of last week? I think I've already explained that with my US market video, so certainly go and certainly watch that, please, and that will explain the bias that occurred ending Friday. So what's happened over the weekend, and what are the news? What's the news flow? What are the headlines? And what's the sentiment in this marketplace? Okay, so basically, fundamentals first of all. So fundamentals. Number one, the stronger US jobs data. Again, it's debatable whether the markets are interpreting that as risk on or risk off. Okay, because if you're in the camp that believes that a stronger US economy can sustain itself, can stand on its own feet without intervention from the government, whether it be via Kool-Aid, whether it be via lower interest rates or maintaining a low interest rate, or whether it be via lower oil prices, etc., etc. It's basically, if you're in that camp that the markets can sustain themselves without any external intervention, and the markets have organic strength, therefore markets will rise, then you're in the bull camp. And if investors are thinking that, and the market participants, and that's the thought process of the major market players, then the stock market, US stock market, will rise, and the market and the share prices will rise, and that should generally, as they always say, when America sneezes, the world catches pneumonia, and everything else should certainly rise along with that because it's interpreted as risk on. If you're in the camp that you believe that without Kool-Aid, without government intervention, this market can't last a day and will collapse and fall back on in and of itself, and this whole rally is built on sand, because in reality there is no growth, because China's slowing down, Europe's in a malaise, etc., etc. Okay, then obviously you want to be in the bearish camp, and you believe that higher rates will destroy any growth that we've potentially gained thus far. Okay, and it jeopardizes that, and obviously emerging markets get hit, so on and so forth. So if you're in that camp, obviously higher costs, reduced disposable income, obviously reduced growth going forward, obviously efficient market hypothesis, the markets are always discovering 6 to 12 months in advance, so on and so forth. Okay, so higher rates equals bearish, lower rates equals bullish. Yes, I understand. Okay, also the fact obviously a higher dollar or a stronger dollar, as we all know, with regards to the dollar, which I've already shared on my US market analysis. The US dollar index held the neckline for the HNS, and on the daily chart held that lower channel support. So again, it's how the markets interpret it, number one. Okay, number two, when we focus on Europe, obviously the only reason why we're interested in US when it comes to European stocks is because the bias in that market generally tends to flow back into this market. Okay, so if we focus now on the European markets, okay, what's happened with regards to European markets? Number one, we've had news out of Greece today, and the news flow has all in all been bearish, outright bearish, to be honest with you. I mean, I'll just read some of the headlines. Greek PM Alex Tsipras on Sunday said he would not ask EU leaders for an extension of the country's bailout program after on Friday, late Friday, that caused a sell-off in the US markets going late. Okay, stated, and they were basically put in a predicament by Mr. Disselboom, or Disselboom, whatever his name is. Okay, Eurogroup's Disselboom. Greece must apply for bailout extension by 16th of February at the latest to keep EZ or Eurozone financial backing. Okay, so in other words, if you want to remain in the Eurozone, you've got till the 16th basically to apply. Now, obviously, Mr. Siparas has obviously got other intentions or other ideas, and he said he would not ask EU leaders for an extension of the country's bailout program. Okay, so interpret that as how you want, but the way in which I interpret it is that basically means that they are there's no real reconciliation there, there's no agreement there. Obviously, the concept of agreeing to disagree, so on and so forth. Okay, so not only that, we've got a new headline coming out. Greece has moral obligation to claim German World War II reparations. That's not very good, is it? I mean, that certainly isn't a good headline coming out of Greece, and that's not going to help or going to convince the Germans to come on board Greece and its creditors only have a few days to decide how to get through the next 4 months. That's an article out of Financial Times. Okay, so that's not good. Former head of the US Central Bank Alan Greenspan predicts Greece will leave the Eurozone, according to the BBC. Again, that's not very bullish, is it? Separas, we repeat that Greece wants to service its debt. If our partners also want this, let's sit at the table and discuss. That goes against your previous comments, doesn't it? Greece debt has reached 180%. It can't be serviced. This isn't a technical issue. I don't know. This is just getting worse and worse. We are not trying to threaten any balance in Europe or balances in Europe. We want to help balances be restored or balance be restored. I mean, this is just amazing. I mean, it just gets more and more ridiculous as we go along. We embody the hope to save Europe. I bet you do. Okay, a founding principle of EU's, a founding principle of EU's, a founding principle. Excuse me, my son's walked in. He should be asleep, but he wants to get involved in Daddy's little YouTube tutorial. Jacob, listen, Jacob. Say hello, everybody.
Hello, everybody.
My daddy's making a video on the stock market. And he's covering the European indices. What do you want to say, Jacob? Do you want to say anything? What do you want to say? Do you want to Incy Wincy Spider? Say Incy Wincy Spider.
This spider.
Climbed up the water spout.
I was about.
Anything else?
Okay, was late.
And?
That's all late.
Is that all? Out came the sunshine.
Okay,
and dried up all the rain. Anything else? That's all? Okay, say bye-bye now, Jacob. Say bye-bye, Jacob.
Oh.
Say bye-bye. What do you want? What do you want to say? Come on, it's your bedtime now. Come on. Say good night to everyone. Say good night, everybody.
No.
Please, Jacob. Say good night, everybody.
No, I'm doing this.
Come on, say bye-bye, Jacob. Come on. Abu teaching now. Abu has to teach, and Abu has to he has to make a video. Come on, Jacob. Be a good boy. Say bye-bye. Say bye-bye.
Bye-bye.
Okay, good boy. Go on now. Go on. Go on, Jacob. Bye-bye, Jacob. Bye-bye. You read book and go to sleep, okay? Okay, so that's Junior Gordon, should I say Gordon Gecko Junior there. Basically had to give his intermarket analysis view on the European markets. I think he sounded very bullish there, I think. Anyway, it's debatable. Okay, well, he'll soon have his own little demo trading account soon, and we'll get him trading and uploading YouTube videos as well, so he carries on with Daddy's work. Okay, right, so going back, we're discussing Greece. Okay, so all the comments or all the I mean, you can go and look at Bloomberg or Financial Times, etc. Basically everything that's coming out of Greece, especially if Mr. Greenspan is now forecasting a Grexit, okay, that certainly can't be good. So overall bearish with regards to Greece and the uncertainty there, especially with regards to the 16th of February deadline. So that's a risk-off scenario. Okay, then we had talks with regards to Hollande, Merkel, and obviously Putin. That didn't bear any fruit. Okay, so again, that's a risk-off scenario. And now there's talk about Russia obviously having bases in Cyprus. So that's not exactly good news either, is it? So again, these are just basically escalation of rhetoric and geopolitical concerns. So you've got socio-economic concerns with regards to Greece, you've got geopolitical concerns with regards to Russia, Ukraine, and then add in the fact that the Chinese data that came out over the weekend came out much worse than expected. If you go to your Reuters website, you'll see that the information there is saying that the data came out much worse than expected. I mean, I can just discuss this with you now. I'll give you the article here. Putin rejects attempts to contain Russia after peace talks fail. I mean, that's just an article from Bloomberg that I've tweeted. So if I go back to the article, there we go. China's import slump, capping dismal June trade data. So here we go. This is your Reuters article. You can read that yourself. China's trade performance slumped in January, with exports falling 3.5% or 3.3% from a year ago, while imports tumbled 19.9%. Now, if imports are tumbling, What does that mean? It means that European demand for exports is tumbling. So if you read that as a 20% drop for demand or in demand for European exports, is that good news or bad news? Okay, so that's bad news. Okay, if the Japanese consumer is not consuming goods and services from around the globe, especially with regards to Europe, that's not good news. Okay, that obviously bodes negative or creates a risk-off scenario again under socio-economic concerns. So you've got China obviously under pressure. Obviously it was under pressure on Friday as well, given the fact that the rate hikes are not going to be continuous. It's just a one-off. So those that were getting excited for obviously a more dovish monetary policy from the PBOC, obviously that certainly got quashed very quickly. Okay, so a lot of individuals asking why the rate cuts are not proving to be bullish for the Shanghai. Now you know. Okay, so you've got China weak, or Chinese exports and imports data weak, trade data weak, again reigniting concerns with regards to a global growth slowdown. Okay, you have stagnation in Europe that relies on exports to obviously propel it higher. Again, that's coming under threat. You've got Greece, obviously, now jeopardising the whole of the EU and the concerns with regards to that. You've got QE really already more or less baked into the cake to a large extent. And remember, QE can only work if there is a socio-economic and a geopolitical a peace or tranquility. If obviously that increases the volume, increases uncertainty, etc., you can have all the QE in the world, but you can't prevent panic selling. Okay. And the uncertainty, obviously, that itself drives negative sentiment and bearish price action as well. Okay, so they're the three concerns that I've raised. Okay, so you've got Greece and potential Grexit, you've got Chinese data that was weak, and plus you've got the jobs report that came out on Friday, plus you've got the Russia-Ukraine situation that may well escalate. Okay, so these are all concerns. If you add them all together, it doesn't paint a very positive picture. And from my perspective, it creates a risk-off scenario, the way in which I understand it based on intermarket analysis. So now that I know the fundamental bias itself is bearish, how can I confirm that, and how can I basically cross-reference it or verify it by looking at technicals and telling me what the psychology or the thought process in the market is and all the potential outcomes and scenarios. So let's start looking at the technical picture with regards to European markets. So let's have a look at the DAX first of all, because it's the leader of Europe. The daily chart, ever since we had a topping tail and a hanging man candle, has been weak. Okay, we had consolidation on a Friday, and still remains weak. We had weak German data on Friday as well, therefore still remains weak. Okay, let's go to our weekly chart, see if we can see anything there at all on the weekly chart. The weekly chart itself, potential topping tail, so rejected the highs. If you go to the 60-minute chart, you have a HNS formation. That's not exactly a bullish sign. Okay, so if you have concern with regards to Greece, you have obviously higher interest rates concerns, cost of capital rising, or financing costs rising in the US, potentially hampering growth going forward. Then that obviously doesn't bode well as well. That's if you're in that camp, which I explained that from the outset. Okay, so HNS formation, again, that confirms the bias being bearish and is in concert. You have the unfilled gap below, and obviously uncertainty and panic selling, etc., with regards to Grexit. 10-minute chart, we tried to push back up to neutrality, which was a gap level that we opened. We failed, and this is obviously 6860 is proving to be solid resistance. Okay, anything else other than that from a technical point of view? Only anything that we can see here really is this is your key trend line, so watch out for that trend line on a 10-minute chart. Okay, you do have previous resistance equals support around the 10,800 level and below, so watch out for that. Once the 10,800 level goes, then obviously the game is on. From that perspective, you've got a little mini HNS formation as well. So there's your head, there's your right shoulder, looking for a potential move lower, and definitely expecting 10,800 to be breached, to potentially lower. Okay, so 10-minute chart certainly from my perspective looks bearish, and we are looking for a move lower, although we do have an unfilled gap up here, so we need to be don't get too bearish. Okay, remember there's QE in the background as well, so central bank put is certainly well and alive, but for now my bias will certainly remain bearish. So if the German DAX is bearish, then obviously the rest of the European markets will be bearish as well. So if you look at the FTSE 100, we've been stuck at this resistance level on the daily chart. If you look at a 60-minute chart on the FTSE 100, again a failed bull flag formation, which I've already highlighted, And a failed bull flag generally means the market's going to move in the opposite direction. You've got the horizontal resistance that's certainly being respected here, as you can see here, potential intraday, potential double top pattern here. So again, that needs to be respected, and looking for a potential move lower. Okay, if we do go lower, then you're looking at support being around the 6750 level. You've got support around the 6780 level. That's basically what we're looking at from that perspective. Okay, so there's your resistance, and that's basically what we're looking at from the FTSE 100 10-minute chart. You've got the double top in place. Now we're looking for a H&S formation on the FTSE 100. So there's your left shoulder that's already gone in. You've got your head. Looking for a right shoulder. Then obviously down we go. So overall, very, very bearish from my perspective. Okay, certainly looking for a move lower. Looking for this level here around the 6800, potentially lower to be tested. Okay, with regards to the FTSE 100. Okay, so the French CAC. Okay, French CAC at the moment it's very bullish in the daily chart because we're consolidating in the upper 25% of that green candle, so we have to respect that. The weekly chart itself very bullish because the bull flag has obviously broken out and moving higher. So from the German DAX and the CAC's perspective, the CAC is certainly more stronger from a technical perspective. 60-minute chart is a different scenario altogether. Okay, so as you can see there, you've got resistance, and the market, the next higher high isn't exactly convincing. Okay, let's go to our Euro stocks now. Euro stocks chart, double top has held. The market has failed to move past that double top resistance at the 3420 level, so that needs to be respected. Looking at 60-minute chart now. 60-minute chart has held double top resistance. You've got the unfilled gap that needs to close at 3370, and then obviously looking for a potential move lower again. Okay, so we have started to make lower lows, lower highs. This bull flag has failed to transpire, therefore it's a failed pattern, and now we're looking for a move lower. So don't be surprised if you see 3340. Okay, that's basically, excuse me, that'll be the target that I'll be looking for on the Euro stocks, potentially even lower. Okay, potentially even testing that 3260 level on the 200 MA. Okay, so bear that in mind. 10-minute chart. Let's have a look at the 10-minute chart. Nothing really. I mean, we haven't really respected this purple trend line now, given the fact that we violated it and so on and so forth. So for now, let's go back to basics, see what is actually working for us, and rely upon that. So you've got nothing here from that perspective. The only thing that you can do is obviously put a trend line there. We're looking at a potential symmetrical wedge type pattern, and from my perspective, you have got a H&S. So you're looking at a left shoulder there, you've got the head in already, and potential looking for a right shoulder move, and then obviously the market sell off and move lower. So looking at a gap to close first of all at 3370, the next one is at 3330. So overall bearish from my perspective, although you do have an unfilled gap above, but like I said, the QE put is there, so obviously take that into consideration as well. Okay, so that's basically where we are with regards to Europe. We can look at the Europe 350 as well, just to verify and check everything is that's the case. Obviously double top scenario on the daily chart. 60-minute chart, we're looking at again double top or horizontal resistance holding. Technically a failed bull flag because we haven't really made a new high, and obviously the market's reversing lower and potentially testing this 200 MA. 10-minute chart on the Europe 350, again no higher highs. We're sort of stuck here in this zone now. Again, like I said, you've got potential for a symmetrical wedge pattern, and this wedge is going to break lower given the fact that you've got concerns with regards to Greece. So I think that's a summation of everything now, folks. So from all my charts from a European perspective, certainly are pointing south, and that exactly doesn't bode well for the markets come Monday. So overall bias, conclusion, markets bearish, and lower we go. That's my interpretation.